Hey there, this is David Cox, Senior Portfolio Manager at Financially in Sync at Raymond James in Waterloo, Ontario, Canada. Today on the webinar, where do we investors stand? It is Friday, August 22nd, 2025. Let's get started. It has been a risk-off week here a little bit. You can see down on the bottom, we've had Bitcoin down 5% and the NASDAQ down about 2.9. A little bit of short-term pressure in terms of many places here if you take a look here. So remember, pause your video player at every time. I'm going to show a whole bunch of data, and some of it you're going to want to pause because there's a lot to see. Let's look at the three stock markets in North America. Well, we'll call them the big ones. The TSX on the left just made highs basically yesterday. The NASDAQ is pulled back, sitting at the 50-day moving average and oversold, so oversold in an uptrend. And the S&P 500 not quite oversold, but again, pulled back to that 20-day moving average. So in the US, what we've got is we've got a pullback in an uptrend, and the Toronto just continues to be strong. But we got to remember always, right, when we look at things like the Toronto stock market, which has been really a dismal underperformer for quite a long time versus the US, we're still at the squinting stage here, right? So you can see this is the relative trend, the TSX divided by the S&P. We always want to kind of keep that in mind as we think about our decisions as investors. Now, Canada's got a lot going on. I think a lot of it is actually a little concerning depending on who you are and what you're thinking. Bottom line is, here's unemployment. This is the unemployment rate. Just take a look at this data here. This goes back to 2005, so it's 20 years, right? We had the spike in COVID. We then had the pullback here. Again, it's the same thing. We're looking at data. We're charting it. So here's the rise here. We've been rising for the last 3 years. We are right now are sitting at a 40% on a 3-year rate of change basis. Bottom line is this is clearly ticking upwards, and that has obviously consequences. And some of them relate to insolvencies. Take a look at this. This is the data from the Bank of Canada, and this is rising in insolvencies that are continuing to tick upwards. You can see that for the last period of time here, over the course of the last many months, we have been ticking higher. That's not good news. The next chart here, this is real estate, and this is, wow, this is pretty significant. We've had some pretty major pullbacks here. Now, again, real estate and interest rates, they don't tend to mix very well. We've talked before about how price to rents and price to incomes got very, very inflated. If you take a look, here's Halton, and again, down 394,000 from the peak. These are average MLS sale prices. You can see the Peel, these are all big markets, right? The Toronto markets and whatnot. And this is the distance or the price change from those high prices. And what this means, of course, is there's a lot of trouble, right? There's a lot of refinancings that are happening. Bank lending is already starting to come in, and most of the banks now are curbing some of their lending practices. And as mortgages start to renew, what we've got is a situation where people are finding themselves in an uncomfortable situation of being able to, not afford what they're paying. Take a look in the last month. Here's the summer, right? Just over the course of the last couple of months, Peterborough down 9%, Toronto 9%. These are pretty significant, right? So I think you're probably going to start to see an increasing number of headlines. And again, I'm not trying to stoke fear by any means. I already showed you the Toronto stock market, which is absolutely bucking the trend. We need to be aware that, again, there's different components of different parts of economies and markets and assets. And again, the point is, how do they all fit together and what does it mean to you and I? Here's the biggest stocks in Toronto. And I want to point this out because I think this is also important. So this is over the course of the last, I guess going back, since April, okay? So if you take a look, here's the S&P 500 in the middle. You can see of the biggest stocks, Shopify's had the biggest performance. Here's Mark Carney, has a lot of involvement with Brookfield Corporation. That stock has done very well. And then down on the bottom here, a lot of the other bigger stocks, Thomson Reuters, Enbridge, Royal Bank, Bank of Nova Scotia, underperforming that Toronto market, right? So again, I think it's just something to understand that a market is what it is, and it contains lots of different things. And the Canadian market happens to contain a lot of gold stocks, and gold stocks actually are doing very well. On the left side, you can see this is the gold bullion, has been continuing to consolidate since that biggest bar against back in the spring. And you can see nothing wrong. I mean, there's nothing wrong with consolidation. I think it's very healthy. I think gold is in an uptrend, bigger picture, absolutely. But at the same time, it's really even more impressive to see that gold stock investors are pushing stocks to highs. The XGD went to highs yesterday. I think that is very, very bullish. And again, anytime we have the equities, which would be the higher beta, the higher risk leaning asset relative to the underlying, which in this case would be bullion, I think that's very, very constructive. Here's a couple of ETFs here on the list here from an in focus standpoint. The left side, we've got the video gaming and esports. You can see that's a very tight pullback to the 20-day moving average. I like to plot these ETFs, when we're comparing them to the industry group. Lots of communications in this one, and then of course relative to the big broad market, which we'll use the US still. And then the ARC generation. This is just one of the ARC funds, ARCW. You can see outperforming technology and outperforming the S&P, but again, a pullback to the 50-day average because again, growth stocks have come in a little bit. bit. I think this is very important. I think a couple of weeks ago I showed the RK, which is the, you know, the kind of the standard kind of go-to name, if you will, in the ETF space related to Cathie Wood and the ARK funds. But the bottom line is I showed it versus the S&P 500, which it did break out. I think that's very constructive from a growth stock and helps to paint the environment that we're in. Well, here's the RK versus technology itself, right? So we all know that technology has been a pretty strong sector. It's been a huge sector over the years, and this is RK in an uptrend leading the technology sector itself. So again, I think this is telling us what we need to know as investors, that again, we want to view pullbacks as exactly that, pullbacks, not a reason to get fearful and kind of run for the hills, which again, there's always fear mongering. And I know it's hard to sort of put this all together. I've just showed some kind of, you know, concerning economic data and unemployment, but remember, we're dealing with different things here. So again, hard to understand sometimes, but again, I'm trying to my best to explain it. Here's some of the big growth leaders. You can see how far they are from their highs. This is Roblox, Robinhood, Palantir, DoorDash, just really a good basket of the stocks here that have really been leading this growth market for the most part. You can see the distance from their highs, that is from the recent high to where the prices are right now. So again, some of these things come off quite quickly, right? Roblox lost a quarter of its value, but again, it had gone up so much. As investors, we have to contemplate all opportunities. We certainly have to contemplate risk and understand that in the context of portfolio construction. We're going to finish off with Sector Watch and we'll be done. There's the gold stocks up at the top of the list, and down the bottom there's the technology stocks, but you can see lots of green here. Energy, real estate, you know, a little bit of a up this week, but again, that's in context of downtrends and a lot of weakness. I hope you like what you see. Please feel free to forward this on to others and follow me on X. I'm at David Cox RJ. Thanks again for your time this week. This has been David Cox, Portfolio Manager at Financially in Sync in Waterloo, Canada.